Welcome back to the TradFi Bitcoin Club. So in today's club, I'm looking to more of like do strategies health check, balance sheet health check, common stock health check, and stress test basically. Let me start and share my screen. Before I start, I have something. Yeah, this one.
Statements I've used in the market. Generally, yes. One of the kind of the statements I've used before is like the best product Coca-Cola ever sold was their bonds, not their Coke. I mean, if you look at some of these companies, whether it's Coca-Cola or let's pick a British one, like British American Tobacco or whatever. There's U.S. companies, British companies. Many of them have been profitable literally for decades straight. They've never had a year without profit. And you look at their balance sheet, and like let's say Coca-Cola has $40 billion in debt. And it's like, Coca-Cola's been around forever. Why do they have debt? And literally the answer is because they choose to. It's an arbitrage. They can issue bonds, let's say before this, last few years of inflation, they could issue bonds at like 3%, 2% for 5 years, 10 years, 20 years, sometimes even longer. I mean, Disney did like a century bond once. They can issue these bonds, lock in these really low borrowing rates, and what they're basically doing is they're shorting the currency, right? So the currency supply is growing at let's say 7% a year. They're borrowing it, only paying 2%, 3% on their bonds, and then they're using it to buy more valuable things. Maybe they make an acquisition, maybe they buy their own stock back, and so over the long arc of time, the windows that are able to short the currency for the lowest rates for the longest amounts of time while owning scarcer things, real estate, business equity, that kind of thing. And so, they're literally shorting the thing that you're holding in your bank account and that you're saving in. Governments are shorting it, corporations are shorting it, wealthy individuals are shorting it. Even people that are middle class or upper middle class and have property, they're generally shorting it. And the least able to short it are ironically those at the bottom of the income stack that don't have assets, that aren't going to get good loan terms, and so they're kind of getting the full damage of the inflation because their wages are getting devalued, what little savings they have are getting devalued, and they've not really gotten onto that asset treadmill of owning scarce things and shorting the abundant things, which is currency.
They probably don't even understand how this works.
So this was a small like clip that I wanted to show, and there is some problem with some people in understanding that how preferred stock is basically a product, and basically some people confuse, like for example, for every company a product is basically something like for let's say for Apple it was iPhone, or for Coca-Cola it was Coke. But the point here that Lynn made in here is basically the best product that Coca-Cola ever sold was their bonds and not their Coke. So I have started from this clip, like it has a reason behind it, because um, I want to convey a point uh, where I need you to think that there can be products which are financial instruments and they are sold by companies, and that can be one of their best product that they have ever sold. So this was the starting point that I wanted to share. But now let's get into stretch and what has happened from a particular date in time. So if you can see the chart in here, this is around Sunday 24th May 2026, and I will just play from here. So as you can see, this was how the performance was. So like on Sunday 24th, we were here somewhere around 70 or $75,000 in terms of Bitcoin, and Stretch was trading around, I think, around 99 something. And what happened on Monday is basically uh, this thing. So strategy completes $1.5 billion debt repurchase and achieves BTC yield of 13.3%. So what did they do is basically they completed a repurchase of $1.5 billion, their convertible note, which was due in 2029 for approximately $1.38 billion at an 8% discount to par. And this buyback was essentially funded by the cash reserves which they had in their balance sheet. And cash reserves suddenly with this purchase suddenly with this buyback went from 2.25 billion dollars to nearly 871 million dollars. So it covered around, I think, 18 to 20 months of dividend runway, or it was basically cash reserve that company had in its balance sheet. And in in let's say on Monday they announced that hey, now the 2.25 billion dollar is only worth like we have used that cash reserve, and it is now worth 871 million dollars. So uh, I think market got triggered on this. And also one more thing that happened around here is basically this thing. This was the first time in the not first time, it was second time. So first time when strategy sold was back in, I think, 20 something, 2021 or 2022. It was also in the deep bear markets. So this is one thing, like they strategy also made an announcement same on May 2026, 26 May 2026, that they have sold 32 bitcoins. And with this selling, market kind of hyper reacted to this news, and Bitcoin went, let me stop STRC, yeah. Bitcoin went from around $77,000 to literally like the low was 59. So it happened in like in a week, so in 7 days. So this triggered, and also on top of that, they used the USD cash reserve which they had in their balance sheet. So this triggered a drawdown in STRC, which caused, like, let me open STRC. So this drawdown got triggered, and it went literally to 72. Now, like, I think management went too far with the promotion of STRC. Like, they literally said that it's money market like, and those things, low volatility. But suddenly with this thing that happened on after 26th May, it literally was much more volatile than Bitcoin. So this was like first time since STRC launch. This was the thing, like STRC had much more volatility than BTC. If you can check right now as well, like STRC's volatility. So historic 30-day volatility is 52%, and if you check BTC has historic 30-day volatility of 29%. So this couple of things that have happened in past 30 or for 30 40 days triggered STRC, and basically management did not follow their own guidance. Like they said that we will be maintaining around 18 sorry, like 18 to 36 or 18 to 24 to 36, somewhere this was the number. And they like suddenly that USD cash reserve was depleted from 18 months to literally 7-8 months with $871 million. So this triggered uh, STRC investors and they started selling, and this selling went much more deeper and much more further. People who started to do carry trade, they got liquidated. So I'm not too sure if I have shared about some like stable coins which were built on top of STRC, but if you are not aware, there are two stable coins which are built on top of STRC. One is APYX and the other is Saturn. So these are two companies which have built their own stable coins via like on top of STRC. Uh, so I think basically, some liquidations happened in this stable coin which were issued by APYX, and I think APYX sold some STRC stocks and Saturn did not sell. But the main liquidations that happened were in traditional markets. So this was pretty interesting. Like the liquidations, like when this STRC fall below from par, like from 100 to let's say 90, I was thinking that like it is something to do with this crypto so-called stable coins, but um, I was amazed to know that it was not from DeFi or crypto or stablecoin who were starting to get liquidated, but it was traditional financial players who got liquidated and they forced liquidated STRC. So this happened in that basically time frame, uh, and STRC went to like 71. From there, it has like somewhat recovered, but it's still at 85. On top of that, what happened wrong from the management is like they have pushed this product as low volatility, money market like, and whatnot. So everything got starting to like it made a reverse fly loop, and everything started to go down. And with this, the market confidence in STRC went down because like as I've shown you, like the volatility of STRC went too high, like 52%. If I remember it right, there was a point in time when the volatility was 1%, 2%, 3%, but all of a sudden the volatility went through the roofs, and this thing like it started to question like the management as well. And like personally, I think I think I have mentioned it earlier also in the Q2 session, sorry, Q1 earnings call review session, where I talked about Lynn asked this question where she asked that, hey, like you have scaled STRC from literally I think 2.5 billion to tens of billion, like it's currently around 10.5 billion, but you have not increased your USD reserve position. So at that point in time, it was not very great answer from the management about what they are looking to do with the USD reserve position. But like specifically in that call, so they did not give very satisfactory answer to Lynn's question. Then the second question that Lynn asked in the earnings call was basically like, how are you looking to the leverage that is building on top of STRC? So if like just a minute. Yeah. So if because the product is yielding around 11.5% at that point in time. Right now it's yielding around 12%. So many like carry trades started to open up on top of STRC and people started looping. Like for example, let's say you have STRC worth $100,000 and then you put that STRC as collateral and borrowed, let's say $80,000 in margin. So now for $100,000 of STRC, you have $180,000 of exposure. And people not only did this loop one time, they did this loop two, three, four, 5 times. So 5 times they like spin this loop and they were like earning around like 25 to 30% with STRC. So this leverage started to build, and this was basically Lynn's question, like how are you looking at this DeFi leverage, not only DeFi and TradFi leverage that is building on top of STRC, and how will you look at it or how will you deal with it? So everything happened in a particular time frame, like strategy sold USD reserves and bought back uh, like their convertible bonds, which was due in 2029. So like they have ample amount of time, like that convertible bond was due in 2029. What's the rush or what is the hurry to like redeem this convertible bond? This was the first thing. Then it was like you might have heard seller about saying that never sell your Bitcoin or sell your kidney, but no, do not sell your Bitcoin, and some other stuff of that kind. Then STRC was promoted like a low volatility product. Then there was DeFi and TradFi leverage that got built up. Then uh, like I covered strategy sold 32 BTC. Apart from that, on top of that, BTC came down from like 77 or $80,000 roughly to literally 60. So all these five things like happened in some span of weeks. So this thing triggered STRC. Now this is what has happened with STRC. Now let's focus on what they are looking to improve. Till here, if anybody has any doubts, like feel free to ask.
Uh, Eid, like, hi, Eid, I was just wondering how you could borrow against STRC.
Um, so in traditional finance, you can put STRC on margin, and that is one way. Like if you have, I think in India you can't do that, but in US or in other jurisdictions there is a way, like you can put up margin and borrow, and then like loop it. So this looping essentially triggered STRC to the downside, and this essentially happened with STRC.
Okay. Eid, I understand. But then, Eid, like, what are the underlying like providers who like provided the STRC, like the mortgage leverage?
Basically, it was brokers like IBKR or Charles Schwab.
Ah, okay, okay, thank you.
Yeah. Okay. Now coming to the steps which strategy has taken recently to um, like fight, or not, let's say, to control the scenario, or what's the update like. what are the steps that they are taking to help to deal in this kind of scenario if this happened in future. So this was the thing. Strategy announces the framework for USD Reserve, STRC dividend policy, digital credit, MSTR repurchase authorization, and Bitcoin monetization program. So these are 5 things that happened. A board approved USD Reserve policy, revised STRC dividend policy, digital credit securities repurchase program, Class A common stock repurchase, and BTC monetization. So what is happening with all of this is basically they now after this thing where they sold 32 BTC. After this thing, I think they started to build on their cash reserve, and they slowly and steadily now have around 2.55 billion, which is closer to 18 months. So now they are like good enough at with their guidance, but yeah. So they are now good enough with their guidance of like having USD cash reserves in their balance sheet. On top of that, they have specifically mentioned 1.25 billion of board authorized reserve building BTC monetization capacity described below. So what is this 1.25 billion dollar of board approved or board authorized reserve building BTC monetization capacity? So basically, if you have seen like, or it is basically accounting thing in particular companies basically balance sheet that uh, so there are securities that, or there are commodities that company holds. So one is for long term, the other is for uh, like available for sale, and so there are 3 to 4 types like of commodities or securities that you can have in your balance sheet. So before, I think from what I can understand, before this thing like 1.25 billion of board authorized Bitcoin monetization capacity, before this, I think BTC was only considered as hodl and never sell kind of thing, or they can sell, but they have not stated in accounting terms that we are actively looking to sell. So there are 3 types in accounting. One is trading. So you trade that thing. The second thing is available for sale. So you do not trade at that, but it is available for sale if needed. Then the third thing is basically long-term investment horizon thing. So think of it as a, let's say you are a company and you hold securities of B company and C company, D company. So B company, you are holding B company in your A company's balance sheet as for trading activity, and you are trading B company. Then C company is basically you are not trading it, but you have it as available for sale. So whenever you require that, you are looking to sell that. Then what is the last thing is long term. So long term is basically D company, you are holding that D company as a long term investment. So these are 3 types of accounting things that company reports in its financial statements. I think this 1.25 billion of this Bitcoin monetization capacity is similar to available for sale category which they have created. And personally, I think it's better to have Bitcoin or this Bitcoin monetization capacity as high as we can, because like company will be selling BTC to fund dividends, and like let's say, I mean, if stock is below 1.22 times NAV, so what is 1.22 times? 1.22 times is basically every sale of share of MSTR above 1.22 times NAV is somewhat accretive to the common stock MSTR shareholder, but below that 1.22 times MNAV, it's not accretive, it's dilutive for MSTR common shareholder. So this Bitcoin monetization capacity or Bitcoin monetization program that the company needs to use is basically when the MNAV is below 1.22 times. So let's say if the market is satisfied with a good number of like the cash like or available for sale kind of let's say reserve that a company has in a balance sheet, so it's better to have like let's say $5 billion of BTC as available for sale in balance sheet. But like just by mentioning it does not mean that you have to like sell that amount of BTC. Like it's available for sale when needed, but we are not actively looking to do a sale. So this is one thing. Um Personally, I like this $1.25 billion of board approved or board authorized monetization capacity of BTC. This amount will remain in BTC, but like it will, like people can think of it as like cash something. So I personally like this method, and I was doing some research with like some LLM models, ChatGPT, Claude, and there I found out the specific steps that strategy has taken is in line with uh, it is in line with basically to have some let's say credit rating update from S&P 500 or S&P. So to the people who don't know, S&P gave strategy B minus credit rating, and this B minus is basically junk grade credit rating. So B minus indicates like this company will not survive for 2 years. So this is junk grade credit rating. And how they have given this junk grade is basically they have given Bitcoin in their balance sheet zero, like zero. They have valued BTC in their balance sheet as $0. So they have not given any credit for holding 8,40,000 Bitcoins in their balance sheet. And I think the main reason behind this was the way strategy marketed themselves, like never sell. And I think S&P also took this very seriously, and they made a point where you as a company are not looking to sell this. So why should we, when we are doing a credit rating, why should we consider that you have this much amount of stake where you are not looking to sell this? So this was one thing that with selling BTC is going to like all the steps, not only selling BTC, like building this Bitcoin monetization capacity of $1.25 billion, then all the other things that the company has been doing recently is in line, like even the convertible debt which they bought back recently, which I told you in start of the session around 26th May. So this was also, that decision was also in line with the S&P guidance. Like they asked company to do three or four things. First thing is have some USD cash reserve in a balance sheet. Second thing was retire your convertible debt. Third thing was like they did not specifically mentioned about having BTC available for sale or this thing, but these 2 points were pretty clear, and they mentioned like you do not have, basically your dependence on capital markets is very high. So dependence on capital markets to pay dividends is very high, like because all of the dividends are funded via MSTR ATM. So in case where MSTR ATM is below NAV, then what are the options that you have? So this was like key points that S&P highlighted in their rating. So companies actively, I think, working in that direction to get themselves a good credit rating. I also did some chat GPT stuff or LLM, some stuff with different LLM models where I gave all the, like, if I can show you, where is that analysis? Yeah. So this was the analysis that I did with, like, I did not mention that this company is basically strategy or some other company. I said that this is a hypothetical company, and I mentioned all the things that they have right now. And to my surprise, with, by the way, I mentioned that market capitalization is uh, 32 billion, and right now, if I'm not wrong, it's around, okay, that is 32 billion. So basically what I mentioned is, yeah, this thing. Commodity holdings, in the starting I mentioned that it is around 30 billion, and then I updated to 50 billion because strategy has around, I think, 50 billion or 54 billion, okay, $52 billion of BTC. So after updating all of this, and I made a point that imagine a scenario where commodity like is already down 50% from its all-time highs. The commodity trade is $30 billion a day. The market is liquid 24/7, and some other stuff that they have in their balance sheet. So debt, preferreds, then other obligations. I additionally added some 1.5, some $300 million cash flow for OPEX, their operational expenditures. Then I added this ATM programs that they have. Then I added governance and credit protections that are available with the company. Then the total capital stack, the asset coverage that they have, the debt coverage that they have. So all of these things I like put it in here, and somewhere around, like, it came around like triple B minus stable rating. So it was interesting to me. Like, I did not mention Bitcoin, but I mentioned it as a commodity. So these are regulatory things which will take some time to, what I can say, which will take some time to, um like, it will take some time for Bitcoin to be used as an capital asset or being recognized by different regulators. So there is a committee called Basel Committee. It basically punishes you, or punishes banks, or punishes, I think in specific to banks, it punishes banks to have Bitcoin in their balance sheet. So for example, if a particular bank has $1 billion of BTC, they need to hold extra $1 billion of cash just to have $1 billion of BTC. So it is kind of like very punitive rule, or it punishes you to hold BTC in your balance sheet. And some other things to just let you know, like, if you have uh, an equity of a company, then you need to have around 25% of that equities amount in cash. So it's crazy. Like, if a bank is having an equity of a different company, then Basel rules say that you have to have 25% of that investment. If you have $1 billion of equity in your balance sheet of other company, then you need to have 250 million in cash. But in case of Bitcoin, like, it is 1:1. So it is like it will take some time for regulators to update and to evolve and to think how will how will they um, make rules around Bitcoin and make rules much fairer. I think the Clarity Act is one of the things that needs to pass, but if you go on Pali Market and check that if Clarity Act is going to pass, the odds are like 50-50, so or 60-40. So 40% are expecting it to pass and 60% are expecting to not pass. So things are not pretty great on regulatory side of things. So these things will take time, and even if the company is taking steps for like increasing their credit rating, I'm not very sure that they will have an upgrade very soon. But let's see, like, who knows. Apart from that, in this strategy, they have um, basically now they have made some repurchase programs as well. So if the securities are trading well below par, then the company can retire the products. Apart from that, if the common stock is also trading below NAV, they also have this repurchase program, which is MSTR repurchase program. So all of these things they have issued right now, and with this thing, now let's come to like the balance sheet analysis. Is basically let's do debt analysis, like the first convert, that is the put date, is basically 16/9/2027. So it is around 1.2 years from now. So this is like first convert which is due, and the conversion price is around 183. So right now the stock is around 99, but the price of convert is at $105. What do you indicate from this price is basically the investors of this convertible bond are hoping, or they have confidence in this convertible bond that it will convert. Then the 2030A, so 1, 2, 3, 4, and 5. These are very close to par, like 108, 89, 95, 97. Only convert 2029, which is, or let's take these two, like convert 2030B and convert 2029, are at 89 and 88. So the market confidence in these two converts is much lower than the other four. So because the conversion price is very high, the conversion price for 2029 convert is 672, and for this is 433. So market is like somewhat bearish that these converts will convert. So let's see like what happens. But like this is the thing. Apart from that, now looking from overall perspective, like also taking into account preferred stack. So the overall balance sheet is 2.6 times over collateralized. So uh, understand this from, like, let's say you have taken a home loan, and basically you have bought a house of 1 crore, let's say, and you have made a down payment of, um, let's say 30 lakh, and 70 lakhs you have borrowed. So in this case, or let's say you had 50 lakh and you have borrowed 50 lakh. So at this point in time, the basically uh, the assets and liability that you have is 1:1. But in this case of strategy, the assets are like 2.6 times more. So it's like you have let's say you have 80 lakhs and you have 20 lakhs, you have taken, let's say 20 lakhs in loan, or let's say you have 70 lakhs in cash and you have taken 30 lakhs in loan. So it's something like that. So it's over collateralized. The balance sheet is nowhere close to getting under collateralized even at, let's say, $30,000. It will be around 1.3 times. So this is how the balance sheet is looking like. Now, the most interesting part of today's like analysis. Now, basically from here, what you have understood is the company's balance sheet is on a good enough side to have be like to keep the business ongoing and to be running the business. But now coming to the perspective of MSTR common shareholder, what will happen if BTC, let's say, crashes to 30,000 or 25,000? Like, I'm not saying that it will happen, but I'm just stress testing in different scenarios. Now, before we go into scenarios, I want to talk about Merton model. So Merton model is basically a structural credit risk framework proposed by economist this Robert C. Merton in back in 1974. So it estimates a company's probability of default by modeling its equity as a call option on its underlying assets, where the strike price equals the company's debt obligations. So basically, this is a model which will help you find out what will be the value of equity when the, let's say, when the assets will equal to liabilities that you have in a balance sheet. So if I go back to this thing, I think it will be somewhere around $25,000. 1.1, okay, 24. Yeah, so somewhere around $24,000, the debt plus pref will be equal to the assets, that is Bitcoin, in the balance sheet. So at this point in time, the intrinsic value of equity will be zero. But now let's like go into this thing. So this is a Merton model that or this is a dashboard based on Merton model that I created on Codex. Basically, I vibe coded it. I hope my screen is visible and everything is good. Okay, I think it's good. Okay, now coming to the common stock stress test and what will happen in a scenario where, let's say, BTC goes to $25,000. So as you can read here, at a BTC price of 25,000. Now, the model is not very precise. It is accurate, but it's not precise. Like, I have taken MSTR holdings at 8,40,000, then cash is at 250. So current is 255, sorry, 2.55. Then debt is around 6.7. Preferred stock is 15.5. Other liabilities are basically, this is a dividend liability of 1 point, let's say, 7. And shares outstanding are 400 million. Risk-free rate 4%. Asset volatility 70%. Merton maturity years. Now I will get into this. What are these things that I am like varying? But this is something that a stress test things that we need to have when I'm stress testing MSTR common. So this, let me hide this call option. I don't want this. What is this index? Index is good. So as of now, from my model, like the numbers are accurate, they are not precise. So BTC asset value at 8,40,000 is at $60,000. It's somewhere around 50 billion. The total assets will be around 52.9 billion, including cash, and total liabilities will be somewhere around 24 billion. And uh, like I want to make a point in here, like preferred stocks are not necessarily liabilities of a company, that they become liability of a company in only event of bankruptcy. Unless and until the company is not going bankrupt, they are not like they will be not like the preferred stock is not a liability unless and until the company is on the verge of bankruptcy. So only in bankruptcy scenario, preferred stock acts as liability. uh, the senior claims are like liabilities, like the debt, convertible debt which they have in the balance sheet, they are liabilities. Then the right now net asset value is around 28.95, so $29 billion. So according to my model, at Bitcoin's price of $25,000, intrinsic value of common equity will be zero, while the Merton equity option value is 13.28 billion as a overall common equity, or 33.2 per diluted share after selected premium or discount. So premium is like I have not given any premium or discount, like it is zero. So one times. If like premium is basically to calculate like give some premium, because call options trade at premium, like especially I think this thing also happened back in 2022 bear market drawdowns, like um, the value of companies at that point in time, the debt to like the debt which they had in balance sheet, like today the debt in balance sheet is somewhere around 7 to 8%, or at that point in time the debt was around 130%. So it was crazy, and the debt terms and back in 2022 was also like pretty like it was straight debt. They have issued bonds, like straight bonds, not also convertible bonds. The bonds were also um basically like straight bonds. They have also taken Bitcoin backed loans with Silvergate Bank. So in one of the podcasts, Taylor talks about um, when at that point in time when they uh, took loan by keeping Bitcoin as collateral, at that point in time there was no one to insure that thing. So Saylor personally insured that transaction from his own capital for the company. So those were different times. But now let's come to Merton value. So look at the green line, like do not like the other violet line is basically the call option of MSTR common. So that is a different thing. So look at the green line. According to this green line, the assets will equal to liabilities at $25,000. And if this happens, MSTR will be around $33. So it will not go to zero according to Merton equity model. And it is fair to like consider this model because the company will not go bankrupt, like they have a lot of things to do before they go bankrupt, like they can sell MSTR, they can sell BTC, so these two are the main things, or they can like pledge, or they can keep BTC as collateral and take some BTC backed loans to pay off liabilities. So many things can be done, like the company has a whole lot of optionality to what to do. But if BTC goes to $25,000 at that point in time, according to this estimate, or according to this model, MSTR share price will be around $33. And basically the MNAV, or let's not go into that, but have you got this point? Like uh, at this point, the net asset value is basically zero. Like for equity holders, you do not own anything in this company, but the value of common stock at this point will be equal to value of long dated call option on Bitcoin in balance sheet, and in the hope of that BTC will recover back. So the price which I talked of $33 is basically that. So this $33 is something like you are giving a premium to let's say to get to become a shareholder of a company which has zero net asset value for its equity shareholders, but in the hope of the Bitcoin will reverse from $25,000 to, let's say, whatever price, and in that case the upside for you is like very high. So this is basically Merton value. Then if you look at this chart, the Merton value basically depends on two things like maturity in years and asset volatility. So higher the asset volatility, that is Bitcoin, which they have in the balance sheet, and higher the maturity in years. Now, the maturity in years that I have taken is 4 years, which like for convertible bonds is basically Merton maturity, like it is 4 years. But if I increase this to, let's say, 7 or 8 years, let's say 8 years, then this value will also increase. Like it went up from 33 to 43 now. So it depends on like Merton maturity. It also depends on asset volatility. So let's say Bitcoin's volatility increases to, let's say, 100, then also the value will increase. Now the value is somewhere around 52. And in this case where BTC crashes from 60K to 25K, obviously the asset volatility will increase. And who knows, like current risk free rate is 4%, but in this scenario, if BTC crashes, I'm hoping that all other capital markets like equity markets and other markets will also crash. And if with this crash Fed lowers the interest rates, let's say to closer to, or let's say 2% from 4%, then also it will increase. So now risk-free rate is not having a good amount, but this is what it is like. So this is Merton equity model. Here is also the table for it. Let me get back to like the default setting for 10 years 70 and maturity 4 years. So on the last table is where you can see the Merton equity value, which which common stockholders will have is basically 33. Like many people think that if BTC goes to $25,000, equity holders are left with nothing, but that is not the case. Like your common stock will be worth a long dated call option for company's balance sheet to reverse in a possible bull market. So yeah, I think it was good for today.